Crypto's falling right now. Bitcoin is under $21,000, Ethereum under $1,500. A lot of other cryptos are down too. The whole market cap is down 4%. We're under $1 trillion. Why is that happening? We're going to talk about that today. Is it something to be worried about, or is it a buying opportunity? We'll talk about that too. Now, if you don't mind hitting the subscribe button underneath the video, it does help out the channel, and then you can see future videos just like this. I have a really cool video that's coming out in the next few days on a very popular topic. I did a recent video that was very similar. A ton of people watched it, so we're going to make a new video on that, so be on the lookout for that video. So let's get into it. Bitcoin falling down right now. It's under 21,000. We had previous support around 21,300 to 21,500. We broke right below that. You can see we're still above 20,000, which is another psychological area of support. We should see if we fall down below that, we could easily fall down pretty quickly. I mean, we moved up very quickly around 17,000 to 20,000. So if we break 20,000, look for more downside, but as of now, we're still holding above that 20,000. We're not that close to it. We're at 21,000. Part of that is just due to the overall markets. The Nasdaq's down 1.23% today. The S&P is down 1%. Dow Jones is down 0.79%. And there's a lot of liquidations happening as well. 75 million in the last hour in crypto, and 159 million in the last 24 hours. Most of that being Bitcoin, and most of it being long liquidations. As you can see here, we have had about 97 million in long liquidations. So there's just a lot of people being forced out of the market. And, it could be worse, right? There are certain stocks like SVB Financial Group, just down 56% here today. Their shares are sliding on stock sale plans to cope with a massive cash burn. VCs won't give them any more money. We know about Silvergate as well. Silvergate, so this company isn't really tied to crypto, but I'm just showing it could be worse. Silvergate is directly tied to crypto. They're down 21.5% today after last night, them saying that they're basically going to liquidate their portfolio, and they've come up throughout the day. I mean, they were at $3, now they're at $3.85. So some swing traders maybe made some money there, but the fact is there are people specifically going after the crypto industry. We talked about Operation Choke Point yesterday a couple times, talking about how there seems to be a coordinated effort in the different government entities to try to choke off the crypto industry, try to make it really hard to get liquidity in there. And because of Silvergate going down, the majority of the crypto firms that were using Silvergate are now turning to Signature Bank. Now, there are some things to be paying attention to. So Silvergate is actually much smaller than this new bank. This is Signature Bank, again, SBNY, and they have a much more diversified deposit base, this new bank. Now, there still are some things to be worried about a little bit. First of all, there could be some dwindling deposits for this new bank, and they might have to realize a loss on their securities portfolio. It's to get a little bit more liquid. Also, the SEC and other bank entities are still going after more banks and more companies that work with crypto. So we could see a crackdown on Signet, which is a replica of Silvergate's SEN. So this is the part of the bank that works with crypto entities. Dwindling non-interest bearing deposits in crypto, and there are a lot of non-FDIC insured deposits at this bank. So they have 89.7% of their total deposits, and they have $89 billion worth of deposits, and these are not FDIC insured. The 90% of their deposits are not FDIC insured. So be careful. Personally, I don't think I have much exposure to this new bank, Signature Bank, but a lot of these crypto entities do. And if they have to liquidate, right, if they have to liquidate their assets because of some issue, or they just have less and less people coming into crypto, but you can still get out of crypto, it could cause some negative price action on crypto. Now, there are some positives here. Mt. Gox registration deadline is pushed back another month. It seems like every single month this is the case, right? So many people are worried about Mt. Gox, but the fact is it just has been on everyone's mind for years, and the registration deadline continues to be pushed back. So now, instead of March 10 Now you have till April 6th, allowing creditors to file claims for another month, which they've been doing this for so long. And the distribution of assets to creditors are now from October 31, start then instead of September 30. So this just continues to happen. Now, there are some positives. Over the last few days, we talked about the SEC basically being pushed out as Binance US did win the sale to buy Voyager assets. We've also heard about them possibly losing in court to Grayscale, and Grayscale being allowed to open up their ETF to spot, or being able to convert it to a spot ETF. So there are still positives that are happening in the industry, but there's some negative price action. Now, part of this could just be due to Fed Jerome Powell speaking over the last few days, inflation not being great over the last month. A lot of this could change on a dime with next week's CPI reports, but at this point, there is some negative momentum. Personally, I would love to buy some more Bitcoin, and I bought a small amount, maybe it was earlier this week or last week, just a normal amount for me to dollar cost average because we had fallen down a decent amount. But I would love to pick up some more Bitcoin under 20,000, and I will be doing that. If we fall below 20,000, I'm definitely going to pick some up. So I think, yes, over the short term, we could fall further. Is it something to be worried about? Not really if you're looking for the long term. If you're someone that is just worried about timing the bottom perfectly, then maybe you don't want to buy right now. But that's going to be the case pretty much the whole time, right? You're never going to feel comfortable buying if you are worried about sniping the exact bottom. That's just my opinion. Some people like to do it, but personally, I'll be continuing to dollar cost average, especially as we fall down further. I haven't been buying much this year, honestly. I've only bought a few times, and I bought small amounts because we were above 20,000, and I thought, there's a possibility that we could fall further. I also took some gains in Polygon and in Phantom, both some long-term holds for me and ones I want to hold for the next bull market, but they moved up so quickly. I mean, Phantom was up 200% in a month that I took some profits, and now both of these have fallen down about 25% or so. So I'm going to be able to put that amount of crypto, or that amount of money that I had in the crypto, back in and get 25% more, Polygon and Phantom. So I think that's a way to play it. If alts all of a sudden blow up and go up a couple 100%, you sell a little bit. If Bitcoin moves up 50% in a month, maybe you just stop buying. Just my opinion. But now, as we're falling down, I am finding it more and more attractive. And I've been dollar cost averaging into other assets as well, like stocks. So as time goes on, I'm going to deploy more and more capital if we keep falling. Like, for example, we're falling down on the NASDAQ today. I bought some different stocks here today because they're just at really good long-term prices. Of course, a lot of this could continue to bleed, like I said, depending on what Fed says, depending on CPI, but long term, I think these are pretty attractive. Let me know your thoughts on this underneath the video. Let me know if you're worried about some of the different things that are happening in the background in crypto, and I'll see you in the next one. Bye.